It's a bull. Good morning. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. I have Deerfield live underwater pier cam on today. Looks like some fish are posing. Saw a great big snook down here just go by. Something I'd love to catch here. And there's another one hamming it up for the picture. Let's take a look at, by the way, this is, again, if you're new to the show, this is, I like to put on daily live cams here around my South Florida area, and they mostly have to deal with water. Maybe I'll change it up sometime, but look how beautiful that water clarity is out today. That's probably about, I'd say 10, 12 feet of water, 15 feet of water at the pier. And is that a barracuda? I think that's a barracuda right here. You'd think this was a fishing report. By the way I start these things out, I love fishing, I love surfing, I love anything to do with the water. Well, here, let's take a look at what we're going to talk about today. First, I'm going to get into spots here. And we're going to talk about a few kind of cool things. I'm going to open up a few charts here, show some comparisons and charts. In comment section, one of our people asked me a question that I'd be one of the first to explain a certain term that we use in precious metals, so I'll go over that. I'll give you the best prices, what the best deals out there on gold and silver, and the, my opinion, what the best deals are out there. Who am I? I'm Brian Kuzmar. I'm a full-time precious metal and rare coin dealer. I've been in South Florida since 1977. I mean, I've been here since 72, actually, but I started working for my father in 1977 at his place, opened my own place here in 1995. Again, I have a lot of experience in buying and selling precious metals of all types, bars and coins, and I have some other specialties too, like I said, rare coins and paper money, but we don't talk about that much. Perhaps I'll do some videos on rare coins one day. Let's take a look at spot prices this morning. I'm going to do a quick update here, and let me just do a refresh on the screen. And about the same, 1858.79. I believe that the Fed speak, Powell's yap is going to open up today, and markets are going to, do one thing or another. But I think gold has already kind of priced this in right now, and so has silver. Look at the strength of silver, 27.80. A lot of people complain that silver hasn't done much, but it was pretty wild and crazy last year. Crazy wild ride all through 2020. And we did very well. I mean, we were sitting in that $12 to $17 range since 2012. Around 2016, things started heating up a little more, and we've broken through the 20s pretty much. I don't think, unless we see a complete economic worldwide global crash like we did 2008, if we see that, you will see gold and silver prices crash. Trust me on that. But you won't be able to buy gold and silver bars at those prices. You'll probably have to make a trade with an ETF or something. But however, that may be a profitable trade. We'll discuss that one day as well sometime, I think. Actually, let's discuss that right now before I get into silver and platinum. My thoughts that I saw in 2008, across the board, everything crashed. I mean, we were already in a bull market already by that time. Didn't look like a bull market to some people in gold and silver, but we were in a bull market in 2008. We were up at the $1,200 level or something like that. I think in gold, I better double check that. But what happened is when the markets kind of froze up and the Lehman event and the great financial crisis of the world happened, gold and silver got smacked heavily. But like now, or like it was a few months ago, there was no product available. When silver was trading at $9 around there an ounce or something like that, $9 to $12 an ounce, premiums were, again, I better check. I don't know what the high was at the time in 2008 when that market hit, but I remember that I called to buy Silver Eagles because it dipped down quite a bit. I said, I'm going to buy this dip. It's huge. I don't think it's going to stay there long. So I went out to try to buy physical 1 ounce rounds and Silver Eagles. Premiums were between $5 and $10 an ounce at a silver price that is half of what it is right now, folks. And there were delivery times. People were quoting delivery times up to 3 months out for silver and gold products. Gold Eagles were over $200 an ounce premium when gold was $1,200. I don't know if many of you remember that during the 2008 crisis, but the premiums were absolutely ridiculous because, again, you couldn't buy metal at those. You could buy an ETF, which reminds me that if we see another 2008 financial crisis, and there's no physical silver or physical gold to go around. Again, if we see a big crash in metal prices, the paper crash, I'm going to go out and attempt to buy a paper product that I think might be secure, in the hopes that that'll be the cheapest way for me to buy silver in that particular time. But typically I wouldn't do that. I want to own, because I don't trust the third-party risk that's involved with these ETFs and with these even the allocated accounts. I don't want people holding my metal for me. However, on a short-term quickie play like that, it might work very well. Again, that's my opinion. I'm not a financial advisor, but I might try that myself because I think if we do, when, not if, when we see the great next global financial crisis like 2008, but times 10. I believe that it's possibly going to happen again. You're going to see metal, gold, and silver prices just absolutely get hammered. But again, like 2008, you will not be able to buy it at those levels. Any physical, any real metal at those levels, you'll be able to buy a paper trade. So I'm going to look for a paper trade to make during that time, a safe one, I hope. But the scary part of that is there is big risk in that. I mean, if the whole system collapses times 10 times what 2008 did, it's a possibility that that ETF or that unallocated account silver I'm buying may go belly up too eventually. So tough to say, but it might be a risky, might be a worthwhile risk to do that. I digress though, and again, I don't want to get you guys pumped up on buying any kind of paper gold or anything like that. Again, unless it's in a trade like that. That's my opinion. I'd rather see people buying. The whole idea of buying gold and silver bars and coins is eliminating that third-party risk. Having the stuff physically in your hands. If the whole system took a giant dump, you have preserved your capital, your wealth to some degree, and likely you'll be able to buy a lot more dollars with that. And we're going to talk about buying more dollars, dollar inflation, deflation relative to the price of gold now and then. That's another thing we're going to talk about in a few minutes. Let me kind of move into silver prices. Like I said, 27.61 overnight to 27.85 is a high. We're sitting right in that range. We're still above 27, so I'm pretty cool with this, comfortable with this. Unless something just drastic happens today, I think these are the levels we're going to see. However, tomorrow is tomorrow we got not tomorrow. Today's hump day. Friday we've got potential monkey hammering could happen on Friday. Let's see what happens, though. I think this is about the level you're going to see right now. Maybe a little gyration up and down. But overall, this provides a great opportunity to do what? Buy the friggin' dips. So silver range 27.61 to 27.85. Platinum, I'm loving the platinum at 11.44 for the people out there that are looking to buy. Platinum premiums are actually really cheap right now, too. Silver, same thing. Premiums are still pretty high on some products, but there is some product availability out there. Delivery times on pre-orders, though, are getting a little longer and stretched out for certain types of products, particularly the cheaper products that I always recommend, as opposed to Silver Eagles and the higher priced products. But it looks like there is some availability out there, so the product premiums are coming down a little bit. Again, with lower silver prices and lower gold prices, this provides you a better opportunity to buy than it did a little while ago. Well, let's see where we're going here with this. I kind of think that we had a bull on the coin today. I'd kind of be surprised. Again, the coin is just a lucky fun thing that we do every morning, starts the show out with. But I kind of be surprised if we did see an up market. I don't really think so. I think we're going to just sit sideways here. Perhaps next week, I think we'll see markets start going back up again in precious metals. Again, that's just my opinion, and that's what it is. It's an opinion. If I knew for sure, I'd be making a big trade with all my money, and I'd be sitting on an island somewhere fishing. Of course, I would be, with better fishing than there is here. That's for sure. Let's take a look at some things I want to talk about today, which is gold prices, 100-year historical chart. Somebody was asking me earlier, here, where is it? And there it is. Right here. Become the first, Donald Robinson, thanks for asking, Donald, says, become the first channel to clearly explain the significant difference between all-time high versus all-time nominal highs, unadjusted for inflation. Then always use the proper moniker. Well, I guess I can be accused of not always using the proper moniker, but hang on one second. Let me pause that video right there. However, yeah, Donald, thanks. That's a good question, and let's discuss it. I've kind of gone over it a few times when I've looked at macro trend charts, Don. So I have talked about adjusted for inflation and nominal prices, but we'll go over a little bit more. And one of the reasons I've discussed it is because one of my favorite charts out there. If you like charts, there's no better chart people out there than Macro Trends, in my opinion. They have a chart for just about everything. They've got some cool stuff like showing reset. Here's the gold prices for a 100-year chart. Look, show recessions. You can turn that off. This is a free site too. You don't pay for this either. But you can turn on and off recessions. The log scale just makes the chart a little easier to read, I believe. I see how it's kind of out of sync here, 400, 600, 800. Then you turn the log scale off. And these become more even increments, 2, 4, 6, 8. I forget exactly why they use log scales, my ignorance, but I prefer to read it with the log scale off. It kind of gives me a better feeling. I can see the increments right here, and it doesn't over-exaggerate the highs, in my opinion. But again, I'm not quite sure why people use a log scale versus a non-log scale. I'll have to look that one up. The other thing I like about macro trend charts is what we were just going to talk about, inflation adjusted. And that has a lot to do with the question that the gentleman over here asked about, and Don asked about. And what was Don's question one more time? Explaining the difference between significant difference between all-time highs versus all-time nominal highs. Well, we are going to do that really quickly here. Plus, I'm going to give you a few charts that you can look at your own anytime and you can play with here. Look, they have a 5-year, a 10-year, a 20-year, 30-year, all years. A lot of good, cool stuff on macro trend charts as far as precious metals and making comparisons. So let's talk about this real quick here. And before I get into that, let's just talk about, since I brought up nominal and I brought up the question that he has, nominal versus real. And here we go, nominal versus real interest rates, examples of it, nominal. Let's use an example of nominal. As in an example above, the nominal value for someone who has $100 in 1950 does not change for someone who has $100 in 2020. So this is a real simplistic explanation of it. If you had a time machine and you just right now, and we're in 2021, and you have a $100 bill in your hand, and I zap you back to well, first the 100 wouldn't work back then. But I gave you a $100 bill for that equivalent time period, a 1950 $100 bill, for example. You still have a $100 bill in your hand, and that's kind of what nominal value is. Nominal value is the value, the par value, the face value of what you have in your hand. What does change in nominal value is, or versus real value is, what does change is the purchasing power, where inflation decreases purchasing power from over time. Assuming an average annual inflation rate of 3.46, and remember, this is just an example, folks, from 1950 to 1920 or 2021, the real value of $100 in 1950 would be $1,081 in 2020. And I also, after I looked at that, I found an interesting site that kind of does calculations, value of, I'll get to that in a second though. But I want to take a look at the charts here because there's a lot of correlations on these charts when you take a look at it. This goes back to what, 1915, I guess. And oh boy, inflation adjusted. Let's turn off inflation adjusted. That's what the real, not adjusted for inflation looks like. All right. This would be hang on one second. This would be the real price. The nominal value is going to, ready? Inflation adjusted. There we go. That's what you're looking at, the difference between the nominal and real prices, as Don had asked a little bit earlier. And again, I'll go over that definition real quick, and I will leave you this site. Just go to Investopedia, in case you forget this, because you want to know these terms. Go to Investopedia and just type in the word nominal. Again, Macro Trends is my favorite place for charts. Investopedia is my favorite place to look up words I'm not real familiar with, or to refresh myself on words that I think I'm familiar with. So, oh boy, types of nominal, and let's move down here. And as it says, nominal versus real. The term real, as opposed to nominal, expresses the value of something after making adjustments for various factors. So that's what the chart I was just showing. If nominal would be the price right here. I'll show you a nominal price again. There's your nominal price, adjusted for inflation. Inflation adjusted, thereabouts, according to Macro Trends and the data that they have. But if I turn that off, there's your real values right there. There's the real stuff. And let's take a look at some different things here. And let me think, what's the best way to look at these charts? Nominal or in the real value? Oh, there goes the phone starting to ring already. But I'm going to turn on the inflation adjusted, just makes it a little bit easier for you guys to read. And the log scale, we will leave the log scale off because I like the way it's kind of even like this. So let's look at our last prior bull markets. There's the mini bull market right there. The first bull market we had in precious metals in the United States after Nixon had removed us from the gold standard and basically took us off the gold standard. That's when we became a fiat currency officially. We're all Keynesians now, as Nixon famously said at that point. So there's the all-time high right there, 1974, in not adjusted for inflation dollars. And 1975, now take a look at this, 2000. Let's adjust it for inflation now, ready? Because we know what the price of gold. Oddly enough, Macro Trend shows the price of gold a little bit lower than I show the high at the time, but maybe they're using New York versus London, I'm not quite sure. But if we adjust for inflation, nominal, not real, this is what the price of gold was really in 1980, $2,266, and wow, over $2,200. So if you look at the real rates versus nominal rates, we've not reached the all-time high yet. If you don't adjust it for inflation, we've not reached the all-time high in 1980. The all-time high in 1980. I did this little calculation too. $850, which I believe that was probably London, and it didn't close there. That was a London high, maybe $850. I don't know why I remember that number, $850, but in 1980, that was probably the high in London at the time before it was monkey hammered down. So I typed in here, and this is a kind of pretty cool site too. Which site is this? Hang on, I'll show you. This is the CPI inflation calculator. Now, I don't know how accurate it is, but I took $850 in US dollars and I divided that, I start year 1980 and year 2020, and it says that the value of $850 or $850 gold 1 ounce piece valued in 1980 would be $2,776 today. So, adjusting for inflation, real values versus nominal values, we still have not hit our all-time high, folks, if you don't adjust it for inflation. We haven't hit the all-time highs. So interestingly enough, over here, if you look at the chart, it shows the adjusted price at 2,600 in 1980. I can't get that high again there. 22, 26. Anyway, I saw it up there somewhere. And then again, if you hit the inflation adjusted, it's a lot different there. And that's adjusted for inflation numbers. Let me turn that back on. Sorry about that. Some other good charts on there. Spike 1980. Oh, there's where I get the numbers. Gold spike 1980. The gold market has gone nuts. Let's see. It says here surged by traded at $800 per ounce, but I did read somewhere, and I forget which site it was $850 per ounce. Nominal, again, I want to repeat this one more time, nominal versus real. The term real as opposed to nominal expresses the value of something after making adjustments. So the real value of something after making adjustments when you're making comparisons versus the face value at the time. So remember the $100 story here. And again, if you get a little confused and you're not sure about it, just type in nominal on Investopedia. As I said, I'm here to teach you how to fish, not give you a fish every day. Once I teach you how to fish, you will eat for life. And you'll have all these great tools and these great advice by an experienced dealer like myself to help you, guide you make your good gold and silver purchases. $850 in gold. Excuse me, folks, I don't script these. I don't write anything down. I just, as you can tell, that's pretty obvious, I guess. I just wing these things. So a couple other cool charts on there. Gold to monetary base ratio. And I'm going to, I haven't seen this one too, so I kind of want to show you. There's a lot of really cool charts on macro trends. This interactive chart shows the ratio of the gold price at St. Louis adjusted monetary base back in 1918. The monetary base roughly matches the size of the Federal Reserve balance sheet. All right, which indicates the level of new money creation required to prevent debt deflation. Previous bull markets ended when this ratio crossed 4.8. So let's look at what years were 4.8 when the bull markets ended. Well, the first bull market we're going to look at here is apparently during the Depression, 1933. There you go. And apparently it ended after it rose above, what was the comment here? After 4.8. So, look at that. After the Depression, the price of gold went up dramatically compared to with the issuance of debt, and the worse the Fed got, and more the Fed got in trouble. But let's take a look at, when did this happen again? Oh, coincidentally, when gold hit its last time high. What was gold's last big high? 1980. Now, we've already talked about inflation-adjusted dollars and non-inflated, real versus nominal. But look at when the last time that chart was. And look at where we are currently. We're not even close to that level. I've got a sneaking feeling that the next spike here is going to be absolutely massive. Log scale. Let me see if the log scale makes a big difference on that. Actually, in this instance, the log scale makes it a little bit easier because I think it doesn't flatten out the bottom end as much, because of the size of the chart. So let's take a log scale here. Again, Depression, 1933. Gold, when the Fed had its balance sheets at its all-time highs, look where gold was. There we go. And look where gold was again when the Fed had its balance sheet at all-time highs. There's another one, 1980. Oh, coincidentally, look, there's 2008. And let's see, I move along. And where's 2012? There's 2012 right there. So apparently right after 2008 financial crisis, the Fed's balance sheet really took a crap there, it looks like. I think that was, I'm not quite sure what the deal was during this particular period, but if you notice all these spikes when the balance sheets were really high for the Fed, gold prices were at their all-time highs. Not particularly there, but here 2012. But look at these balance sheets here, just kind of going to, it's kind of confusing actually. And another cool chart out here, the Fed balance sheet. Now this actually just shows the two lines versus, it's the same chart you just saw without using the formula there. So show recessions, don't show recessions. I'm going to show the recessions. The spike right here, look at the balance sheet versus, again, Fed balance sheet versus the gold price. This chart compares the monthly percentage of the growth Federal Reserve balance sheet and the price of gold back to 2004. So that's a fairly recent chart. But take a look at the balance sheet, and it's kind of odd. Look at the comparison here. Gold's down as their balance sheet it tends to increase as they start to unwind the stuff that they have, unwind the QE, slow down the QE. There you start to see the price of gold go up. So again, confusing data if you really think about it, but pretty cool chart. Another cool chart I saw on here that I don't look at too much, but is the Dow to gold ratio. And again, let's take a look at some numbers when we're at all-time highs here. Where are we? There's 1980. Look at that. Dow to gold ratio. That's because the gold price went up so far compared to what the Dow did. There's your ratio right there. I suspect that this next dip over here I'm getting to is going to be a similar thing. Look, 2012, 2011, when gold was at, again, its last all-time high. And where are we today? It looks like there's that little dip right there from last year when gold was well over the $2,000 range. And I think we're going to make another substantial climb here and then another big dip, in my opinion. Actually, I think we'll probably make a big dip from here. But I don't want to kind of read into these charts. I'm not a chartist. I like charts for one reason, is they tell you where you've been. They don't always tell you where you're going to go, but they do tell you where you've been, and it's fun to look at them. And you can see correlations. Look at all those correlations we were looking at here between the charts, all those spikes and all those valleys and spikes that just happen to always coincide during our highs in precious metals. And if you kind of extrapolate that and try to see where we're going next time, our next big highs are going to be even far bigger, folks. It's going to be crazy. And that even applies to if you do the gold to silver ratio chart, which I'm not going to put up here right now. But if you look at the gold to silver ratio chart, the silver to gold ratio was at its tightest during our all-time highs, 1980, 2012, or as recent as 2020. But again, I think the 2020 high for gold was just a spike. I believe we're going far beyond that. My gut tells me that 25 is going to be a conservative number for gold. And the silver's tough to say, man. It's an industrial metal. It's a strategic metal to some degree, you think, because electronics rely on it. I think there's a big reluctance. I mean, all the monkey hammering we see in silver, I think, comes from governments and financial institutions that have a vested interest in keeping the price of silver down. Say, for example, like, does Elon Musk want to see the price of silver go up dramatically? No, he does not, because silver is used a lot in the electronics and in parts of his car. He doesn't want to see stuff that he has to buy to put his car together go up drastically in value. That's also not good for the government, because the government has to deal with inflation at that point. And speaking of inflation, what's this transitionary inflation stuff the Fed's talking about right now? Oh, by the way, I hope I explained the nominal thing good enough there. Thanks for bringing that up. Again, I'm sorry, I forgot your name, dude. Don, and where is he? Don Robinson, thanks for bringing that up. I hope I kind of explained it. And always use, then always, all right, Don, you're following up with too much, you're asking too much of me. And then always use the proper moniker. I can't promise that, Don, but at least I explained the difference here. Hey, thanks for watching, sir. I'll get back to comments here on yesterday's video as well if I can, as long as I don't make this video too long today. So the Fed balance sheet, this is all cool stuff. And again, look for our highs in gold when you're looking at these charts. Look at the 1980 high, 1974 high. And 1974 was actually a bull market for gold. Not many people know that. It wasn't the biggest one. The next biggest one was 1980, and then after that was 2012. But based on all our bull markets since Nixon took us off the gold standard, 1980 is by far, in real dollars, the biggest bull market we've ever had. It was over $2,700 in real money, not in nominal terms. Well, let's take a look at some of the articles here. And where is my ZH? There's ZH. Not too much to talk about. I mean, I can talk about the politics of some of this stuff. But you're all reading it. You all live it and see it every day like I do. Let me see if there's anything here that I think is important for gold and silver buyers. One thing we haven't talked about in a while is black swan events. Well, what can be a black swan event? Well, major power outage across half the country or through our financial districts for any length of time. Major hurricanes, major storms, earthquakes. How about things like wars even? Confrontational events between people like the United States and Russia. So, I mean, these are things you got to look at. This particular article, negotiations will be short from Biden-Putin option to the Fed Putin option. Basically, the last thing we need to do here, folks, is to restart the old Cold War. And it seems like certain segments of Washington, D.C. and our war party, our military-industrial complexes always push for that. They make more money. They sell more weapons. But pushing us to a situation where there might be a shooting war between us and China, or even assuming, even just like playing around like that just to get people nervous. I mean, tensions can happen, things can happen, and an event like that. So you keep your eyes open. Keep your eyes open over these kind of potential black swan events, natural disasters, wars, that kind of thing. So you want to keep that's in the radar here. When you start to see things heating up, you may see precious metals just go crazy in the event of these events, or if these events happen. Again, that's why they're black swans, because they may or may not happen. But if you know for a fact that something's going to happen in your lifetime, at least that may or may not. Black swans are going to happen. You just don't know when. I guess that would have been a better way to say it. U.S. export prices explode at fastest pace on record. Again, inflation soaring its ugly head. China is trying to reduce they're releasing state supplies. They have their own. They have their own supply of steel, aluminum, and I think copper. And China is working real hard to prevent copper, steel, and those aluminum, those really base industrial metals, from rising in price because of inflationary fears. However, we all know, I don't think maybe the Chinese have figured it out, but you can only control these markets for so long. The black markets, the markets behind them, people are going to it doesn't work. It doesn't work for long, at least. However, they are trying to stem the tide of this inflation that we will be seeing coming up. Will it be transitionary? I think so to some point. We'll, inflation that was created by shipping issues. Not enough shipping people out there, not enough employees, not enough product. I think that we'll catch up to being able to get things shipped timely and not that expensive. The shipping, the transit times. I think we'll catch up on getting more employees. I think we're going to catch up on all that stuff. However, we are never going to catch up to back where we prior to 2008, and prior to the 2020 shutdowns. We're not going back to anything better than we had before that. If we get to that point, we're lucky, and we still haven't fixed the systemic problems in our economies. These bubbles, these huge mega bubbles created by Fed-fueled cheap money. Basically, anyways, I digress again. U.S. export prices explode at fastest price. Again, airfares are soaring, and again, that has something to do with fuel costs and I'm sure transportation costs, obviously. Shake out some weak hands before the next leg up. Not too much. Again, I could go down here and comment on every one of these things. You folks know that. Feels like 1977, inflation too high, money too loose. Good article, actually, and it kind of goes into what we were just talking about, real values versus nominal values, and the comparisons on these spikes. What is similar now to what we had back then? This article says that money was too loose then and inflation was too high then in 1977. So there's your similarities. What other similarities are there? But there it is. China stocks tumble after Beijing cracks down on commodity prices. Econ data missed across the board. Well, that's to be expected. I'm going to move into gata.org. Where's my GATA? gata.org is, they don't always update this frequently, but as you know, and some of you probably said, God, he's going to say it again. If you are a gold and silver stacker, you must have gata.org on your list because, or on your bookmarks bar, because they know who the They know who the players are. They know how the game is played. They talk about the manipulations. And they're not just tinfoil hat wearers sitting in their mother's garages. These are people that actually know what they're talking about. And if you want to know how to win at any particular game, and everything's a game in life somewhat, if you want to learn how to play any particular game, first you have to know how the game is played, who the players are, and how they manipulate it. And gata.org does that wonderfully, and they don't pay me a dime to say this. Maybe one day they'll give me a little advertising spot on their page. But I'm a local brick and mortar, wouldn't do me any good anyway, because I only sell locally. Tom Lungo, killing all the birds with one pile of gold. Financial posted a long complication about what he thinks that David Crown means to the world financial system. I'm going to read this tomorrow because I think this just came up and I didn't really get a chance to read it, and I don't want to kind of like bumble over it. Negative money market rates are more reason for the U.S. to push gold down. Another really kind of interesting thing is money markets were really important. It's a multi-trillion-dollar market. You know what a money market is. Most of you have had your money parked in money markets before. A lot of big investment companies that hold people's money, that does people's pension funds, they will take money out of stocks and bonds and move them into money markets. The problem with money markets right now is they're almost at zero rates, negative. If they ever go into the negative, there's the end of multi-trillion-dollar money market funds. Where does that cash go then? It can't stay. Where do you put cash if the money market fund is sub-zero rates or barely above zero? Some crazy bad stuff going out there, including reverse repos, which some of it might be confusing for some of you. And again, I don't want to digress into some complicated economic talk. Central banks can be beaten with gold and silver. Turk tells KWN. I like this simplistic article. Gold money founder James Turk tells King World and Gold Silver that one of those times when investors can fight City Hall. Let's see here. Let me see if I can click that article. It's a long-winded review. Sorry about that, but you may want to read that yourself. And in fact, gata.org is your homework every week. I'll kind of go over some articles or point some articles I think you should read every once in a while, but most of you should be reading this already. Let me see what else is on there. Not too much. I'm going to skip over gata.org as well pretty quick today. And where are we going to go from here? I think we talked about a whole bunch of different things. I'm going to go into yesterday's video. Gold rules, Bitcoin fools. I knew I would get some flack on that yesterday a little bit. But if you just look at the title, yeah, I guess I could deserve a little flack for the title there, but I completely explained my reasons why I think that gold rules and Bitcoin fools people, and more or less what I was talking about is just the fact that there's so much mystery behind it, the volatility of it, the fact that what do you really own? Not going to go over that. If you get a chance to watch yesterday's videos, yesterday, I thought it was pretty good myself. I thought I had some good content for you there, guys. Let's take a look at some of the views here. A lot of the comments here I really appreciate. A lot of my people that watch on a daily basis. Let me see if I can hit a few interesting comments here. I'd like to thank everybody for watching, though. What? Dry heave. You probably should do some research before you make foolish videos like this. Oh, man. I guess Dry Heave is talking about the crypto. I knew I was going to catch some flack. Surprisingly, I only got one negative comment on that video yesterday from Dry Heave. Do more research. I did do some research, and I was asking legitimate questions, if you watch the whole show, sir. And this is probably coming from a 14-year-old that buys doggy coins. So I'm only joking, Dry Heave. I really appreciate you watching. And I did do my research. I kind of would like to have guys like yourself, instead of say you should do some more research, tell me what I missed. Put it in the comment section. What did I miss? What did I say that you thought was wrong? You know me. I view the comment section, so I will answer legit questions and questions that help us both learn. Thanks for watching, Dry Heave. I appreciate it. Joey from Seattle. Yeah, I agree 100%. Heart of Areas, buy the friggin' dips. Yes, yes, yes. Dumb Things You See is a local customer of mine. Really like the guy an awful lot. And thanks for watching Dumb Things You See. I know you know, and that's what I was saying yesterday. I think you kind of got the feeling, because you didn't jump all over me for saying, talking about cryptos. Now, don't get me wrong. I prefer physical metal over crypto, but as of yet, I have not lost any money on crypto. Bought Dogecoin 5 cents, sold it for 38 bucks. Bought silver with the profits. That's exactly what I'm talking about. You know, if you listen to my videos, what I say all the time, I say, you know, play, especially with cryptos. I said it yesterday multiple times. Listen, if you know that market and you can go in and you can make, I view the crypto market right now, because of the volatility and all the whales that are in there, like a casino. And apparently, my friend Dumb Things You See was able to learn how this game is played. He's made some really good moves, and he's made some money. And what's he done with that money? He's preserved it. He's preserved his money he made that with. He preserved his wealth with silver and gold. And it's the same thing to me. It's like going to a casino. If you're a really good card player and you can make money at 21 or blackjack or playing poker, you know how the game is played. You know how it's rigged. You know all the numbers behind everything, and you can go in there and win some money. Well, what are you going to do with that money you win? Are you going to keep just sticking it back in the game, or are you going to preserve it? Buy some gold, silver, and buy some assets that will preserve the winnings. And I like Dumb Things You Say. I like how you're looking at that as you went in there, you knew what you're doing, you played the game, you made some money, and you preserved your wealth. You preserved what you made. Thanks for watching Dumb Things You Say. I really appreciate it. John Smith, Tree Climber. John Smith says, not sure how the stars bury the gold on the other side of a round planet. That's pretty funny, actually. I don't know. Maybe it has something to do with gravity, sir. Thanks for watching, John. I appreciate it. Tree Climber says, truth, very few investments are as volatile as cryptocurrencies. And that's true. Lots can be made and lots can be lost. Oddly enough, you always hear about the guy that made $1 trillion or $1 billion in crypto, but you never hear too many people whining about what they lost. Same thing with lotto tickets. The guy that buys a lotto and spends $6,000 a year on a lotto ticket, hits a $500 lotto ticket and goes, I won! That's probably what the cryptos are like in many points, you know. But anyways, God, I got to get rid of that word anyways. I say it too much. Crypto is not encrypted, not a currency. Thanks for watching, PZ. I would agree. King Tolwa, nice to see you watching, sir. Price of gold has already been manipulated. Well, we know all that, sir. I hope Basel III is stopping this criminal activity about price of gold. No, I don't think it's ever going to entirely stop all the criminality and all the manipulation. People will always look for an edge. I mean, look at car racing. Even the top best teams in car racing are always just on the gray side of skirting the rules to win. You're got the same thing in economics, the same thing with investments and stuff. The same thing, there's always going to be people out there that are right on the edge, and they're very aggressive and looking to win. So as far as manipulation, no, I don't think you're ever entirely get rid of it. You're always going to have to deal with people working on the edge, and again, that's what we got today. A lot of the manipulation is not outright illegal, but it's on the edge, and that's just humans, I guess. I don't think we'll ever get rid of that, King. But the long-term manipulation of gold and silver, I wouldn't worry about it. They can only do it in short-term spurts. And a good example is the prices we have today. Thanks for watching. I appreciate it. Third Eye says, I invest in silver and cryptos. Hey, good. Not all your eggs in one basket. Agree with you 100% there. That's how you play the game. I agree 100%. You are looking at it as a game, Third Eye, and that's the way you should look at the crypto market, as a game. And if you know the players, you know how the game is played, you know how it's manipulated, you will win, sir. And thanks for watching, Third. Mike, I'm going to have a sip of coffee here as we talk. So, man, I got to heat that one up, man. It must be a long show. That thing is cold. Don Crapto, yes, sir. Satoshi Nakamoto has been rumored to be an acronym for Masang Michi. I hope I'm not going to say a bad word here in a second. I didn't read this. All these companies are heavy into tech. Interesting. Nakamichi is now Chinese-owned. Okay, so comment that that's, again, who knows? It's a conspiracy, and conspiracies aren't bad things. A lot of conspiracies turn out to be true. I talked about conspiracies yesterday, defining them and what a conspiracy is, what my conspiracies are. And I agree 100%. Who made Bitcoin? Why is it such a mystery? Does it have to be a mystery? All right, I'm not going to go over yesterday's show too much. Thanks for watching, Sarge. I really appreciate it. Display my flags. I don't have any flags on my page. There's a flag over here, sir, and an eagle. There's a flag on my page. Thanks for watching, Redeemed Patriot. Crazy people often recognize crazy scam ideas quickly. Spending trillions of fake dollars, that sounds crazy to me. Thanks for watching, Tree Climber. Agree 100%. Zipper Fixed. Steven. Hey, Steven, what's up? Mark Barnett. I can't spend the powers down. Trade anything with gold. Hey, I can't argue with that, Mark. Jay Gill, thanks for watching. He's a copper scrapper. Now, if you're going to do it, that's like mining. You're like copper mining out there in the suburbs there, sir. So, modern-day suburban copper miner. Chris Dutcher, thanks for watching. I'm preaching to the choir. I know that a lot of you guys already know what I'm talking about. I could imagine that some of you just fast-forward some of my stuff. After doing these shows for over a year now, every day, 5 days a week, except for holidays, I've not missed a single day. You kind of start talking about the same stuff. There's some circular stuff going on here. However, sometimes maybe I need to be reminded about it, and that's why I'm talking about it. Hi, G, what's up? How's it going in Dubai? I guess you live out there, and if you're ever in Miami, come and visit me. Eddie Garcia says people think conspiracy theories crazy because Hollywood movies make them look crazy. Yep, that's what we were talking about yesterday. MO, hey, thanks for watching. Interesting, easy way to break in. We were talking about Wikipedia. God, I covered a lot of subjects yesterday. Wikipedia, GameGate controversy. I'm going to actually look that up afterwards. Someone died as a result of the whole thing. I was talking about how I don't trust Wiki. That's why he brought this up. I don't trust Wiki when it comes to economic pages or in political pages. They change too much. It's always someone's opinion. And remember, a lot of politics is all about opinion, but economics too has become more about opinion as well. And Wiki just changes up too often. They have some wacky definitions. I do love Wiki when it comes to nature, biology, all kinds of things that aren't political or economic in nature, but they suck when it comes to economic terms. That's why I like Investopedia. Good, I'm glad I got that point up. Thanks for watching. I appreciate that, Mo. Alex, appreciate you watching. I didn't know that 0.7% of the investors, 0.7% of Bitcoin investors own 85% of it. That is kind of really interesting. I didn't know that. Hey, thanks for watching. I appreciate that, Alex. Thanks for some great advice. I buy the dips each month. I had to spend $1,500 to avoid sales tax in Florida. Yeah, we talked about sales tax or in California. Sales tax has an exemption, and Florida has a $500 exemption. So for you, my customers out there listening to me, if you didn't know that, if you're spending over $500 in Florida on any type of precious metals, there is no sales tax. Sales tax free. That's a beautiful thing. Under $500 for some of the smaller investors, it kind of sucks. They do discriminate against people with less money, unfortunately, or that particular exemption does. Anything but gold. You get distracted. A cool name says I get distracted by shiny things. That is true. I popped that a little while ago. I looked at what's he talking about. Yeah, I saw that big colorful fish go by at 2:04. Kind of caught my attention. Yeah, I'm kind of ADD. Yeah, can't you tell? So thanks for watching. Cool name. Wow, I got a lot of comments here, man. Here, I'm going to go over a few more of them here. Donald, oh, yeah, I did. I explained that, Donald. I hope I did a good job. Let me know. Benoit says, you're right about the tremendous energy that we need to produce gold in a collider. Yeah, I talked about that. God, what didn't I talk about yesterday? Holy smokes. Man, I guess I had a lot of content yesterday. Thanks for watching, Benoit. Yesterday, eBay, silver bullion, 34.50. Can't find it under 30 cents. Market dropped today. Yep, 2 plus 2 equal fish. Thanks, call it a breeze. Appreciate you watching. Same with you, PZ. If derivative gold silver dies out, the price will maintain these levels. Will the loss of so many investors destroy appetite for gold other than a smart? No, I don't think so. I really don't think so. They'll just find different ways to buy gold, hopefully physical. Eric Mort says, no flack for me and mine. It's not in our hands. We don't. Exactly. Third-party risk. When you own physical gold and silver in your hands, Eric, you eliminate a lot of third-party risk. Did you see Yellen's Build Back Better, Harrison's? Yeah. I could get into politics, MMT, modern monetary theory, and all kinds of other socialist bullshit things. But let's not talk about that now. It just upsets me. Thanks for watching, Christian. Dr. Dog will hunt. This is all misdirection. The Fed is neutered. Markets are fooled and think they have tools. The only tools the Fed has is all work there. Physical, silver, and gold will save you. I agree. I think the Fed has used up every tool they have. You know, all 5 bullets or all 6 bullets in the revolver have pretty much been fired off. Right now, they're just threatening to fire more off. So where do they go from here? Negative interest rates? They're talking about raising rates to kind of taper inflation, but man, they're in a rock and a hard place. I think the Fed is very, very smart. I don't think the stupid people that I say they are occasionally. I don't really mean that. They're very, very brilliant. They're on a sinking ship. Whoever's running the Fed is on a sinking ship. They've been on a sinking ship for decades, ever since we became a fiat currency, ever since the Federal Reserve notes have come out and the Federal Reserve has taken over. Private bankers, they've been on a sinking ship ever since. They've got their asses covered with the gold that they hold. However, they have to do everything they can. They have to jawbone these markets up. They have to jawbone the dollar up. They can't afford the dollar to do a Weimar thing and go into hyperinflationary period. It would be the end of their jobs and the end of their money-making scheme. Anyway, thanks for watching, dog. Satire says, as soon as you start talking about physical dollar, a strip club popped up in my head. My God, I was all over the place yesterday. I even brought up strip clubs. Great minds and such. Thanks for laughing. I used an analogy about the dollar, the use of a dollar versus crypto in a strip club. And use your imagination if you would. Max Stack says crypto and stock market digital illusions of wealth. You only realize the truth when it's true. You know, it's not a profit until you physically have it in your hand. And what does constitute money? Gold is money, in my opinion. The dollar is really a fiat form of money, but stable to some degree. Cryptos are not money. Again, I talked about that yesterday, and I'm not trying to trash them. Well, I got through yesterday's videos. Today, I'm going to real quickly tell you, because it's been a long report again, best deals out there. What's the best deals out there? Well, I'm not going to give you specific what to buy, because who knows what's in the local shops. What I can tell you is buy the most recognizable product you can. And when I say recognizable by industry people, not recognizable by your friend or your brother or your mother or whatever it may be. Who cares whether it's recognizable by them? You'll be selling it back to other professionals. So buy a recognizable, an industry-known recognizable product for the cheapest premium you can. Don't be paying big premiums. So be paying no more than $6 per ounce on silver right now on a premium over per ounce. I prefer to see you in that $4 to $5 range. Don't pay any more than $100 an ounce premium on any gold products. And in fact, I'd rather see you not pay more than $85 over. There's products out there in the $60, $85 range plus spot. And as you know, I am a brick and mortar dealer only. I don't sell online, so you have to live near me or be in my area to buy from me. We're here 10 to 4 Mondays through Fridays, and I advertise to beat the 3 big online sellers that I respect, but I can still beat their prices. APMEX, SD Bullion, and JM Bullion. I can beat their prices pretty easily. And as you know, I always recommend that if you can, go out and support your local business. There's nothing wrong with APMEX, SD, or JM. If you have to buy online, there's nothing wrong with those companies. I believe you'll get your medal, and they're fairly competitive. However, I'm all about keeping that money local. I can't tell you how important it is to keep money local. It gets spent locally. So if you can find a local dealer in your town, in your county, and even if you have to drive a few hours in your state to find a local dealer, I recommend you do that. Because the other thing too is, yeah, there may be convenience in having it show up at your door, but you're going to have to sell this stuff someday, and you're not going to want to ship it through the mail or ship it through FedEx. Trust me on this. You're going to have to find someone to sell this metal to at some point, or if you plan on passing it along your kids, they are going to have to. So you're going to have to do your research and go out and find some place that you're going to need to sell this metal to. And while you're doing that, you might as well start trying to buy from them as well. Just my opinion, so I'm going to stick with it. Hey, that's about it. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Call me anytime at 954-493-8811 between the hours of 10 a.m. and 4 p.m. Mondays through Fridays. Happy to help you out with whatever the best deals are. Meanwhile, let's see what happens and keep buying the dips, folks. Have a nice day.